Our interview with Tom Landstreet, our resident RedChip economist.
Hello there. The last time we spoke, we discussed the special dividends and the fact that the increase in the dividend tax rate on January 2nd or January 1st, 2013 would lead to a lot of companies announcing special dividends. Of the 20 names that we highlighted in our work, we screened them for insider ownership and sort of other metrics. 7 of them have announced large special dividends. So once again, people respond to incentives, and the government is the biggest definer of incentives, positive and negative, in the economy every day in millions of ways. They rearrange GDP. So I always look at the world this way, and I've got to be amazed at the Federal Reserve and what they're doing and their recent announcements. So I'll put it into the context for you. As you may know, the federal government the Fed has been buying $80 billion a month in securities, $40 billion in mortgage-backed securities, and $40 billion in treasuries. They're purchasing these, of course, from the big money center banks. So they're infusing cash into the economy, significant amounts. $80 billion a month is huge. The monetary base is up $1.4 trillion from where it was before the crisis. What's interesting about the Fed's most recent statement is they said they'll keep doing this. They'll keep this buy program until they either achieve 2.5% inflation or a 6.5% unemployment rate. We're at 7.9% now. I've measured how long it's going to take us at the current pace of job additions, how long it's going to take us to get from this unemployment rate to 6.5%. And basically, at the best case scenario, they're going to have to continue their $80 billion a month program for the next 17 or 18 months. So take 17 months times $80 billion. This is a $1.4 trillion addition to the Fed's already existing $2 trillion balance sheet. And this $2 trillion, by the way, is the largest ever by hundreds of folds anywhere on Earth. I mean, it really is extraordinarily bloated already, and they're about to increase it by over 50%. So when I look at the stock market, I have to tell you, the Fed's behind it 100%. So when you hear talking heads say, well, Wall Street must expect the negotiations of the fiscal cliff to come out in a favorable situation, I don't think that's the case at all with the current bull market and the current strength in stocks. I think it's 110% the Fed. It's $80 billion a month in a buy program, infused directly through the money center banks, and the capital markets are the first place where this type of activity will manifest itself. Literally, it is inflation of stock prices. And by the way, we may go into a downturn in the first quarter of 2013. It may very well be recessionary, or at least a quarter of negative growth. And if the Fed continues this, it won't matter to the markets. They'll continue to be buoyant. It's very 70s-like. So here we are again. The government's the 800-pound gorilla. In this case, it's the Fed. And so thank you very much for your time.